All right, so you are going to want to watch this video. This is really exciting. We're going to be talking today about the Hometown Heroes program that was recently announced. Governor DeSantis put this out in the state of Florida. And I am here with no other but Timothy Hart from Van Dyke Mortgage. Tim. Hello, Tim.
Hello, Brad. Thanks for having me, buddy. I appreciate it.
You bet. So he is an expert in in this arena, anything regarding mortgages and finance here in Southwest Florida. And this program I'm just excited about it because I'll tell you what, it has been a couple of years where anybody who is, not cash buyers or, not able to put down more than 20% on a property, they've been striking out in real estate, right? So this is a huge opportunity. Can you give a little bit of background as far as what the program actually is?
Yeah, sure. And I agree with, the excitement that we've seen, and we've had down payment assistance programs offered in the past here and there. One, they run out of money quick. Right, that happens. Or they're a massive pain to get done. And so this program passed by Governor DeSantis, Hometown Heroes, has $100 million in funding, and that's for the entire state of Florida. And I know we're going to get into the details of who qualifies and whatever, but that $100 million, what that gives a person that they consider a hero is $25,000. It's either 5% of the loan amount or $25,000 up to $25,000 towards their cash to close. And this whole program, the excitement, Brad, that we've been hearing already from realtors and buyers and people that are like, hey, I want to buy a home, but they don't have enough of the money, and to cover the down payment plus closing costs. So we're jacked up about it, man. I think it's gonna be a great thing for people.
That's awesome. And we're really excited about it too, because for these potential buyers, home buyers, they've been struggling with rising home prices, right? Prices of homes are going up. So now that's less affordable. Interest rates have been going up. So now that's less affordable. It's like, can we get a win here? Like what is the win? And I think that this is a huge deal. So that $100 million, how long do you think that lasts?
Well, it's interesting you say that. So we had a pretty big meeting on this 2 days ago with the state, and their quote was basically that the $100 million, they want it to be spent. They want this to be more of a permanent program. And Brad, the other thing is I got some pushback right off the bat on, hey, we're just giving away more money, right? Like it's just wasting money and freebies and welfare or whatever, right? Like this isn't free money. And, just so people know up front, like it's going to be attached to the house, but it's going to allow so many borrowers to get in and own a home now that, like you said, just have not had. Maybe they got the down payment, but they didn't have the closing costs. And Brad, in our market, you've got to have both. No seller right now, when we're filming this, middle 2022, they're not going to cover closing costs right now in this market. So you got to have both.
Absolutely. And so we'll dive into like, how do you qualify? What are the qualifications for it? Who this actually pertains to? I was just doing some quick math. And if somebody maxed out, if everybody maxed that out, we're talking 4,000, that would be 4,000 applications that could be served with that $100 million. That should math out. But the program also goes up to $363 million for next year, correct? Like that's the idea, is that there's going to be more money that's going to be put towards this.
Yeah. And they're basically saying that, like, in a roundabout way, it's not going to run out of money. So, I mean, they plan on this even if it does run out of money, they're refunding it.
Okay.
And it's something they want permanent.
This assistance is more than has happened in the past. It's been 15 years since this kind of down payment assistance has existed. So let's talk about how it works, because it's not free money, like you mentioned. It's not free money. And so what is it? Like, do they just give you a check, or how does that work?
Yeah, right. It's cash, Bitcoin. No, what they do is they give you it's a second mortgage, is basically what it is. And so you have your first mortgage, which, by the way, Brad, this works for all loan types: VA, a VA loan, an FHA loan, conventional, USDA. It's all loan types. And you have your first mortgage, and then you have the second mortgage from Hometown Heroes. that second mortgage is just attached to the property. There's no payments the entire life of the loan. There's no interest. It's think of it like, hey, my uncle had a trust fund, right? And just says, hey, here's 25,000, pay me back when you get it. That's all I want. Like, that's literally what's happening here. And so you only owe that money back if, one, you sell the property, or two, you refinance the property itself.
Or isn't it, there's after 30 years, which nobody stays in a home for 30 years anymore, but it's a 30-year loan. So after that, it would be due if you did not sell or refinance.
Yeah. And the good news, if we are right or wrong on that, Brad, we may not even be here to even talk about the 30-year, so who knows?
I don't know what you mean.
I'm just saying, it's so far
like
away.
We're gonna die. Is that where we're going with this? Okay.
I may.
Right.
Yeah. No, it was a bad joke. It wasn't funny.
I really hope. I thought you were saying like the whole state of Florida is going to be wiped out.
No, I'm just saying in general, like 30. We don't even know, like 5 years from now, like what's going to be.
We'll be on Mars with Elon in 30 years. It's basically
boy Elon. That's
you can fly away in a space shuttle to Mars and get away from that 30-year free money.
There you go.
Never have to come back to Earth to claim it. Awesome. So that, the other thing that sort of does too is think about, we're in an inflationary period right now. And so $25,000 right now, if you think 10 years from now, you're not having to pay interest on that money at any point. We're, looking, if we follow history and the trajectory of the housing market, the home is going to be worth significant more. And so that money at that point in time is worth so much less than it was today. So they're basically, the state is taking all of the inflation out of it and giving you the ability to get into a home for less cash than it would take you otherwise. Yeah.
And I think, our state does have, they've got an affordability issue right now, in my opinion, for especially, working class people that are just renting and rents are going up. I mean, home prices, all about them. And again, these conversations we're having with these borrowers already, it's their credit's good. They make decent money. They're just missing the down. They're missing usually the closing cost portion of the down payment.
Got it.
The cash flows.
Got it. And with VA, I mean, if somebody qualifies for VA, that's 0% down. FHA is 3.5% down. So that's all you have to do, because the challenge that I have seen, and I'm sure you have too, is a lot of those low down payment loans have significant closing costs, right? So the VA funding fee or FHA, all the fees are much higher on the lower down payment loans. And so, the cash that is needed to close, if the seller's not going to contribute to it, that can just knock people right out of the market.
Yeah. It's definitely, and we have a conversation a lot where it's like, hey, I got my, I got 5% down. And then all of a sudden, like, man, you blindside them with the closing costs. A lot, if you're watching this right now, you got to remember, you have cash to close, down payment, and closing costs. It's not just one or the other.
Right. A lot of times I wish that the contract worked like that, where it could show, closing costs as part of it, because the real estate, sales contract just says purchase price minus your deposit, minus your financing, your balance to close is what it's called, is this amount. And so it doesn't take that into account. And so that's a real big problem from that perspective. And so again, there's no payment on any of that assistance money either the entire time. So you're getting essentially a free second mortgage that does need to be paid back, but that helps people get into a home. And I worry very often for people who, are working class people in Southwest Florida. Yeah. Our market tends to cater to second home purchasers who, wealthy retirees, they've got the cash to come in. And so, that money coming into the area can really make it impossible for the local people, who are the ones who are doing the work to keep the city running, keep the area running, to be able to have housing. And that's not a good, that's not a good thing.
No, it's not. And if you want to start getting into like the, the jobs and the qualifications of it, we can jump into that too. So maybe people, if they're interested in it, we'll let them know.
Yeah. So 100%. So let's talk about like who actually qualifies for this. Do you want me to jump into the income portion, or should we have some fun with the different occupations that are eligible?
The occupation list is awesome. I think, for whatever way you want to go, but I just want to make sure there's a couple things that people need to remember, like when they're talking about the employment. One is they got to be full-time. So that's a biggie. You got to be a full-time employer. And all of these jobs that you're going to go over, or I would, or whatever, you got to have some kind of license or certification.
Full-time employee. You said employer, but employee. You don't have to employ people. You have to be a full-time employee.
You have to be a full-time employee. And one thing we didn't mention, Brad, was also you have to be a first-time home buyer. I didn't say that yet. I'm sure in your notes you're going to cover that, though.
Well, but so let's talk about that. So what does that mean? Does that mean never owned real estate ever? What does that mean?
So in this case, in most cases, first-time home buyer is someone that has not owned a home in 3 years. In the case of this program, it has not owned a home in 3 years or occupied a home they own in 3 years, meaning someone got divorced, they never got taken off the mortgage, they've been separated for 4 or 5 years, they don't live there anymore. But those cases are very rare. So it's really, you haven't owned a home for 3 years.
Okay. Got it. So I'm just going to pull up, I'll share this, the information here. So we're looking at now the FHA, USDA loan limits, and then the conventional and VA loan limits for the different counties within Florida. And then our third column here is the Hometown Heroes income limit. Yeah. And so since you're the expert in this field, that income is a household income, not an individual income, correct?
No, this is another big change here, which is good for the borrower. This is not a household income. This is a borrower income. So if you have, if one of them works at Publix as a store manager and the other one's the teacher, right? You can use both incomes, or use the borrower's income is what qualifies for it. Like if what I mean is, like, if one person is not on the loan, the public store manager in this example, you don't count that person's salary into the total loan. So it's who's ever on the loan. It's not a total household.
Okay, good. Thank you for that clarification. And so if you have
that way, on USDA and a few other ones, it is total household income, like you were saying.
So if you have a high income earner in the house, that we'll talk about what the limits are here, the income limits are, but if you have a high income earner in the house and one who makes less income that qualifies for this and maybe has good credit and they can qualify for it, then you're saying that person can just be the borrower on it and qualify.
Yep. Exactly.
All right, cool. I like learning new things. So in Collier County, so we're going to focus on this number. So that borrower maximum income, the limit on them is $141,450. So obviously Collier County is Naples. And then in Lee County, as we scroll down here, that's $120,600. So that's a pretty good limit, right? That's a pretty sizable limit, especially if we're talking about one borrower. And so as we go over to the next thing that we can talk about is who that is. And some of these people, in the medical field, especially, they're, higher income earners. So that 120 max in Lee, that's a great number. It's a great number to be able to qualify.
Yeah. I mean, you think about it with two people, especially if they're both that qualify for this. I mean, a cop and a nurse or a teacher or firefighter, whatever, like that 120 mark, that's probably a ballpark going to be a good number for people, I think.
Mm-hmm. Yeah, it's reasonable, right? If it was like less than $40,000 and that becomes unreasonable.
But that's another thing about this program I like, Brad, is that like a lot of these programs, and we're kind of jumping on this one pretty hard because it's sometimes states and federal governments put out programs like HARP. I don't remember that. It was a refinance like back in the day, and like they all sound great on paper, right? But like you can never close them. No one could ever get the deal or, get it done. And so this is a way more common sense, attainable type of product for borrowers out there.
Okay. We're going to talk about that, like the process when it starts and how to apply for it. I want to jump into that occupation list because they have, hometown heroes. Unfortunately, mortgage broker and real estate broker don't qualify for hometown heroes. We do not get that badge, which we shouldn't. But the
for
real
yourself, man. We need
I've seen you in a cape before. All right. So the true hometown heroes, we'll go through some of these. So law enforcement officer, corrections officer, people relating to the law, firefighter. I mean, yes, absolutely. That's a great one. Paramedic, emergency medical technician, a public safety communicator. I mean, great, fantastic. This is a big one here, this category around educator, right? So teachers, career specialists, librarian, school counselor, social worker, school psychologist. That's awesome that teachers can qualify for this.
And also, if we can just pause there for just 1 second on that, a lot of times on certain government programs, private school gets left off. So private school teachers, as long as they have that certification, as long as they have the certification, they'll qualify as well. So it's private and public, just so it doesn't clarify that.
Great. I did not know that. Licensed childcare operator. You can see that they're being very broad with the definition, which I think is super helpful. Nurses, obviously, home health aide, anybody, healthcare practitioner. So physicians, physician assistants, medical assistant. Then we get into some interesting ones that really broaden it, because acupuncturist. Yeah, right. Acupuncturist, osteopathic physician, chiropractic physician. I mean, these are a lot of times, these are careers where like the state just passes them by. So I think that's really awesome to have that. Podiatric, that's how you say that, I think.
I'm just impressed that you tried to pronounce the last one you did, because I just did this earlier and I just zoomed right by them.
So, well, yeah, I mean, some of these are really interesting. So as we get into, anything relating to dental, speech and language, certified nurse midwife, awesome. Like nursing home administrator, occupational therapist, respiratory therapist, a dietitian, a nutritionist. I mean, some of these are not ones that I would expect to be on the list, and I'm happy that they're, athletic trainer, massage therapist, like phlebotomist, x-ray technician, optician.
It's a lot, isn't it?
There's a lot. Veterinarian. And then obviously we have our active military personnel and veterans, being part of that too. So I mean, this is super broad. Like I could name 50 people off the top of my head that fit in that criteria to be able to qualify for. So I think that's awesome. And, I had a conversation the other day with a client who was super excited, who was a chiropractor, and a good friend who's a chiropractor, and was like, I think I can qualify for this. And I was like, really? Like, I was surprised by that conversation because, usually it's nurses and doctors, but this is more broad. So that's fantastic.
I think it's pretty, I'm sure, like, if you're watching this, like, is that person really a hero, or why isn't so-and-so on there? And, it's not our spot to pick who's on there. That's who's there. So, I think it's pretty neat. And, hopefully anyone that fits this pays attention to it and can take advantage of it.
100%. So speaking of taking advantage of it, when and how does this work?
Yeah, so we're able to start going live with it on June 1st, or it starts going live on June 1st. And so what people are going to be doing is, like, you really have to, the lender you go with has to be approved to do this. We are Van Dyke Mortgage approved. But what you do is, there's not a lot of like extra governmental stuff they have to do. You apply through your lender, like, for example, just say it's us, right? Hopefully it is. But you apply through your lender, and your lender is the one that takes all your information, underwrites it according to these guidelines, which the guidelines aren't that complicated, not much more different than whatever program you're going for, right? Not a big difference. They take that, we reserve a spot for you with the funding, and we close, using their money as well. And the borrower doesn't get overly involved. We are waiting to get word on if there's a small, like, couple hour training they have to do. We haven't gotten full clarification on that yet. But even if it is, I mean, a couple hours online doing something, I'm pretty sure for 25 grand, no one's gonna have a problem doing that part. Right?
Yeah, 100%.
Yeah. So that's the part of the loan. Again, if they qualify for FHA, VA, conventional, and the first time home buyer is a big deal, and their full-time employer and their job description fits what we're talking about, and this could be a home run for them.
Yeah, I absolutely agree with that. And so June 1st is when it opens up for applications. It's my understanding July 1st is when the money becomes available, right? They can start funding those.
Yeah, that's what we've been told to do. July 1st, we can start funding.
Okay. Now, does this change anything with the timeline for financing? Because, we're telling generally somebody who's getting a loan, 30 to 45 days is a pretty normal, I would say a normal time frame to close on a property in our market. Does this change anything?
No, from what I've gathered, it's not. We asked this on, like I said, we did a training with the state a couple of days ago, and there was no added time. Like, it's not like a 60-day close. 30 to 45 days is what we still would. I mean, definitely 30 days. Give yourself 30 days right now. But 30 to 45 days achievable. And Brad, if I can give a piece of advice on this, is that okay if I just try to give?
No, you can't tell, and you can't help anybody. We're not here to help people, of course.
All right, I don't want to drag it on. So one thing we've been really recommending to people, especially in this program, and Brad will attest to it, any realtor it's getting an offer accepted is one of the hardest things. You get pre-approved, yay. But the hardest part is getting an offer accepted. And Brad, with this program, we can actually fully underwrite their file, FHA, VA, or conventional, without having a property in place and using that down payment assistance program. So when they go out looking for a home, we can have all of that done while they're either looking for a home or before they even start looking for a home. And when they make that offer, I think how we do this. We call the listing agent, we tell them how great they are. And if you're a listing agent and you have a fully underwritten borrower, they're going to take that offer. If there's no, if you're not facing cash or something like that, but majority of times that offer will win, save them a lot of problems and headaches too, doing it that way.
I'm really glad that you brought that up. So this money, you don't have to have a property picked out yet, is what you're saying. You can apply for it and you do not have to have a contract in place. Well,
so like we'll get it set up to apply for it. Like the application part to Hometown Heroes is not going to be the difficult part. It'll be getting your loan in place. And once we have it in place, because we underwrite it according to their guidelines. So I don't want to say they just take whatever we send them or anything, but like it's basically going to be done. Okay. And assuming that they meet those criteria, which you're going to be the one verifying to say, yeah, this works or this doesn't work, kind of, to be certified, you're sort of on the line with that. Absolutely. And then those funds are they're sending that straight to the title company as a loan, just like a lender would do. So they're wiring over those funds. Yep. Yeah. They're funding it that way. And we can't request the funds until it is, under contract, clear to all that stuff. So, but yeah, they send the wire, from the way I understand it, they send the wire straight from the state to the title company. So once you give the Tim Hart special seal of approval that these people do qualify for the Hometown Heroes program, the state recognizes that they will get those funds, assuming they've not run out of funds, which it sounds like that's not going to likely happen. They don't want it to happen. Let's put it that way. Yep. Okay. That's a big deal. So because the worst case scenario for somebody is they get excited about the program, they go out house shopping, they find a home, they get it under contract, and then they find out that they're not able to get this money. Yeah. And that's highly unlikely that would happen based on what work you've done already. Correct. And why I do bring that up is because if the lender, because not everyone does that. Some lenders do offer, fully underwritten pre-approvals, but if they don't do that, honestly, the borrower always runs a chance of not being fully qualified. It depends who you're working with out there. You know how, you know how that goes. It just,
Right.
you do run a risk of that. But yeah, in general, they should, if the lender approves it, goes to the proper channels, they should be fine.
Okay, got it. And I would say, not from it's not from like a perspective of this is going to be the way that it is, but I would assume that once you do your underwriting and say like, yeah, you can do this, that you don't want to wait 6 months to buy a house at that point, because, the longer time that goes by, that risk does exist about that money drying up. So I would say it's in their interest to get something going sooner rather than later.
Well, yeah. And that's for anything right now in lending. We want to get you under contract quick.
Especially with interest rates. Yeah.
Yeah.
Right. Good. Anything else that we should know about this?
No, I don't. I think honestly, I think people will be doing their friends and family that fit those jobs you went over, and they know someone that's currently renting. I think they'll be doing them a great service by sharing this information with them. I really do, to help them own a home. But no, I think we covered a lot of it, and I'm always here for you, Brad, you and your team, whatever you need or your clients need, happy to help anytime.
That's awesome. I sincerely appreciate that. And what we're going to do, so in the description below, we're going to put in a link as an assessment to help somebody make that next step. And then we can share, once they fill that out, we can share over your contact information to be able to get in touch to get that whole process started.
Cool, man. Cool.
Awesome. Well, thank you. This is, I'm super excited about it. Thank you for coming on today. I know you're busy with a lot of things and prepping to get this off the ground. So super good stuff. And, let us know in the comment section below, is this something that you think is valuable? Is this something that you would take advantage of? And as always, make sure that we like and subscribe. Tim Hart's got a channel too. So I'll put his channel below and we'll get a little extra pump over there. Let's give him some love. Yeah, you bet.
Thanks for having me, dude. Appreciate it, Brad.
Absolutely. All right. Thanks.
See you guys.